Hey guys, I want to take a look at the Optimism chart. The ticker for this is OP, and I have the daily time frame open. Now, before I get into this, I should probably mention that since you're here, if you want to be able to find these videos again, because I'm a small channel and YouTube doesn't really prioritize the small channels, then you should subscribe. And when you subscribe, it's going to show like a little bell. Just click on that and then click on all. Because if you like this presentation, if you like this analysis, and then you leave the channel, you might have a hard time finding it again because YouTube basically just shows like the more established channels that have like 100,000 subscribers, and yeah, and they're all like doing crazy faces in the thumbnail and stuff like that. But if you want like very consistent analysis, I'm going to try and do about 2 or 3 of these videos every single day. And if you want to be able to find this channel again, then yeah, maybe just subscribe. Okay, so for the Optimism chart, here we are in the daily, and the first thing you should do when you're looking at any coin, start from either the weekly, the monthly, the weekly, the daily. Right here, I'm on the daily, and just mark out the most significant levels. And it's okay if these levels, if you don't have to mark a lot of them. Just mark the most obvious levels that are very consistently providing levels of support and resistance. So here I have 2 levels marked on the Optimism chart. You have this upward sloping support line where we've had multiple touches. So it started, so here, 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 here. So about 5 touches. And then recently, before we broke down, you see like it was holding up, basically, sorry, go by where the candle bodies close, because you'll see like we'll wick down, but then there's kind of a fight, and then the candle body will close above the line. And then when we broke down, basically, this level of support flipped to resistance, and then you see we fought for this line, 3, 4, for about 5 days before we dump back down. And now, what we're seeing here, we dump back down, we had this long bullish wick, and then that was the start of what we're now seeing a new uptrend on the daily. So you see, we made a low, and now we made a higher low. Here was and now we're making a higher high. So we're making higher lows and higher highs. That's the start of a new uptrend. When you see this happening, a good thing to do is maybe just take a trend line and then just connect the bottoms here. That way, if the price does kind of fall over, you can look to this level as a potential support. Okay, then another thing I like to do is just to make sure that we are trading technically and the price is respecting levels, is I want to run a Fibonacci retracement. So for this first one, I'm gonna run it from right here, from this kind of swing low. Oh, I have the trend line, wrong one. Okay, sorry, yeah, a good chance for me to show you where the fib retracement tool is. Just go right here, and then it's the top one. So I can run it from the swing low up to the swing high here. And yeah, okay, so we basically found support. You see this long wick? It came down exactly to the 786 retracement. And now we are in this level here, this 618 and the 61.8 and the 65% level. This is what I call the golden pocket, and the price will oftentimes respect this level as well. And right now, so we bounced around, we bounced off this level, and now we're kind of just making our way up. And you know what? I want to also, just out of curiosity here, I'm going to run the fib retracement from this low up to the top. Okay, so a lot of times traders will look at kind of different levels. They'll draw it differently. So some will draw the fib from this swing low, some will draw it from this swing low here. So when we drew it from this swing low, we came down right to the 786. We got the long wick, and now when we drew it from this swing low up to the top, look where we got the wick. Look at this strong bullish wick. That just means a lot of buyers came in at this level, and that is exactly the 61.8. So anyone that tells you like technical analysis doesn't work or Fibonacci tool doesn't work, I don't know what they're talking about. It clearly does. Okay, the next important level that I drew, I'm going to look at this level right here. So I'm drawing this horizontal support and resistance line, just basically like a range, and that range goes between $1.82 up to $1.86. So not a big range, but this is the level I'm looking at, because you'll see like the bodies will close right before it, but we'll have the wicks to pop through, and that's the same right here. So yeah, draw your trend lines as a range if you have the wicks and the body. So a good way to do it is just draw like the body to the wick and just look for the level of consistency between it all. So you see, so this served as a level of resistance. We came up, became support, and basically it tried to support us right here, but it broke through. It broke through. Once we broke through, we came back up, and basically previous support will be flipped to resistance, and that's exactly what happened. We dumped down, and now if you can identify the pattern here, so it's resistance, support, support, resistance. What do you think is most likely going to happen if we approach this level again? Well, it's going to act as, potentially it's going to act as a level of resistance. So knowing that, what you can do, or what I would likely do, is if I see a sign of weakness right here, like say if the price comes up to it and it starts to form doji candles, and then I do this and I see like a bearish divergence on this RSI, or this one particularly, it's called the divergence indicator. Then what I may do is I may enter a short. So I would just basically, maybe I would sell here, place a stop loss here, and then I could target, maybe this range. Just an example, right? So in that case, I would risk 3% to potentially gain 15%. So that's all basically trading is, guys. Just find these potential setups. Don't risk a lot, so have a tight stop loss, and you want to basically enter trades where if you're wrong, you don't lose much. Now, of course, it can come up here, and if it does come up here, the next potential area that would make a good short opportunity would be this long-term upsloping support line that broke, because again, when a support level breaks, it kind of flips to resistance. So if this level, if the price can break through this level, which I think eventually it will, then the next one would be right here where you potentially enter a short. Now, I got to say that the overall long-term price action on this is relatively bullish. So by entering short positions, it's somewhat risky. I would much rather, a higher probability trade for me would be maybe if this price came back down here, then I could look for a long. It's much better to trade with the trend. But when I'm entering shorts, I use such a tight stop loss anyway. And I make sure I'm entering trades that offer a good risk-reward ratio, and I'm very conservative with my price targets. That's why I'm able to oftentimes successfully counter trade the overall macro trend if you just try to scalp these little pullbacks, right, on the short term. Okay, so what I want to do now is I want to take a look at another chart that I have up here, and I have a different set of indicators on this chart. And I mention this pretty much every analysis video, but I like this indicator so much and I use it a lot and I just think it's great, so I'm going to mention it again. This is called the Smart Trail, and essentially it's a dynamic level of support and resistance. So when the price is below it and it approaches this red line you see, it'll oftentimes act as a resistance level. So you can see that right here. We came up, the price fought with it a little bit. We almost broke through, but we got to sell off this wick down and then we got rejected. So, and then when the price is above it, it'll be blue underneath, and oftentimes when it comes back, it'll act as a level of support. This time it kind of acted as a level of support, but it eventually broke through, and then at which point it became resistance because the price was under this red line, and then as you can see, price will come up, get rejected. Price will come up, get rejected. This was a huge rejection, and you can use this as a trade entry. So when you see like the price, basically right here, for example, you have this this candle. We basically broke through it, but by the time the candle closed, it was just a sell-off wick, a big fake out. And then when you saw this here, this is the bearish engulfing candle. That's when you can get into a short position and just kind of ride this down. So again, we came up here, rejected. So we were fighting with this resistance a long time. And then again here, we got rejected. But look what's happening right now, guys. Right now, we were getting rejected. We fought with this for almost a week straight, 5 days. And then we just had a bullish engulfing candle. And now, look, we're now this flipped from red to blue. And that's it. That's a very bullish sign. That's a very good positive sign. So if you look back here when it happened, when we got this flip, the price was a little bit over $1. And ultimately on this run up, we went to $3.22. So not a bad move. Right here it happened. The price was around 84 cents and we made it up to $1.40. Not as impressive, but still pretty good. And when it happened here, we got the flip. Even if I count from this candle from 57 cents, it took us all the way up to $2.24. So just recognizing that pattern, we just flipped this smart trail again. Now it's flipping blue, so who knows where we can go? Maybe it's going to take us all the way back up here. But so that's just that's a very, very bullish sign. Pretty stoked about that. And okay, so now the long term, the daily chart's looking pretty good. What about a short-term entry? Well, let's scale this back and let's look at the 1 hour time frame. So as you can see on the smart trail, this is serving as it works on every time frame, guys. This is serving as a level of support right now, but this is not what I want to look at. I want to look at this indicator right here. And when I'm looking for short-term entries, oftentimes what I like to do, I like to look at the previous day low and the previous day high, and then also these order block levels, which also serve as a level of support and resistance. So all this denotes is an area on the chart that has a lot of transaction volume. So we have one down here, but we have one up here as well. So I have the previous day high and this order block right up here. So that tells me this is a good chance that the price, when it comes up here, it's going to struggle with it a little bit. So if I see the price struggle with it from here, I can potentially enter a short position and try to short it back down. Or even right now, I mean, ideally the time to enter would have been down here. So if I take this, so if I see the price come around here, like okay, for example, this candle right here with the long wick, I could enter there. Say even if I entered at this level when the body closed, I can place a stop loss just below this wick and the previous day low, and the target up there would be, even if I targeted the start of this order block, that gives me a risk reward ratio of 1 to 2.85. So it's almost a 3 to 1. 1 to 3 risk reward ratio, meaning I'm risking 1 to get 3. So that would be a good long opportunity. And if I targeted up to, if I set my target up to the top here, that would be even better. That would be almost a 4 to 1. So yeah, guys, I mean, if you do this, like even if you're wrong half the time, but every time you bet 1, you get 2 back, or the chance you're taking is like you're risking 1 to get 2, 3, or 4. Even if you're wrong half the time, if you're right half the time at those odds, then you're going to be profitable in the long term. So short-term play, I would just trade between this range. Let me see on the 15-minute if there's anything unique here. Nah, it's the same range, guys. Basically, from here up to the previous day high in this order block. Yeah, those are the short-term trades I would take in either direction. Like if we're up here, maybe you look for a short. If we're down here, look for a long. By the looks of this particular candle, it looks like we're going to head back up to this range. Say if I got in right now, theoretically, if I got in a long position, I don't know if this would even be worth it. Let's say if I did it right there and I put my stop right here. Nah, this is a negative. That's a bad risk reward ratio. I'd have to target all the way up to the top to even make it like slightly better than a 1 to 1. It's not really that appealing to me. So this is why when the price is at the midpoint between the next level of resistance or support, I don't usually enter. I want it either at the resistance or at the support to enter the position. But yeah, guys, that's Optimism. So overall, it looks good. It looks bullish overall, especially when I consider what's going on here on the daily time frame in regards to this this flip here, flipping from red to blue. That's actually pretty huge. So I would expect this one to make its way back up. I don't think it's necessarily going to pump tomorrow, but this is a very, very bullish sign. Now, the coin I just analyzed in the last video, Ethereum Classic, it's not at this phase yet, right? That's still working out its pattern and still well under this red resistance level. But here we are. Optimism is a little bit ahead of Ethereum Classic in terms of that. Hey, guys, I hope that was helpful. If you're getting any benefit from these videos, it doesn't hurt to leave me a comment and let me know. It's good feedback because this is a new channel. And once again, if you want to be able to find these videos in the future, maybe just subscribe and hit the bell and then click on all. All right, guys, have a good day. Take care. Bye.